How quick do you execute? Some of you take a few minutes to get an execution done. You know, you wait for your confirmations, you wait for this to set up, you wait for this to set up, you wait for that to set up, then you've got to think about it, then you've got to find the right button, you've got to get your mouse on that sell button, and then you click on it and you're finally executed. And some of you, even really quickly, can execute within a few seconds. But these HFTs are trading within nanoseconds. In other words, they're trading at a different frequency. So when we look at the different frequencies, we can look at this concept of Fourier transformations. So when we look at the Fourier, the idea of changing these time domains to frequency domains, changing the frequency changes what you see. Take a look. So this is the same image, but in different frequencies. Do you see that? You've got your radio frequency sees the image like this. The infrared sees it like this. The visible sees it like this. The gamma sees it like that. The X-ray sees it like this. The ultraviolet sees it like this. Well, these are all the same image. They're all exactly the same image. So when we understand that these are all exactly the same image, the idea is, if they're all the same image, you're not seeing anything different, but you are seeing a lot of things that are different. You're seeing a lot of things under the hood that you maybe wouldn't see inside the visible. So what you see on the charts is part and parcel of that storyline. What you see in the chart is visible. It's the visible light, if you like. It's the visible narrative. And we can try and work out what that means to us as traders. But one of the things that we want to try and do is, where there is darkness, let there be light. And yes, I'll be burned at the stake as a heretic. Of course, I'm going to be burned at the stake as a heretic. But let there be light, right? Let there be light. Because what we're now looking at is a different way of looking at the marketplace. We're looking at the marketplace from this idea that if we change the frequency, we can start seeing underneath the surface of what's going on. And that doesn't mean just the footprint charts, where a lot of people saw the light for the first time was the footprint charts. When they saw a candlestick or a bar chart, they finally saw what was causing the candlestick to form. But when we suggest that there's a situation, when we see a situation forming, and we start looking at, for example, that top edge in treasuries, and we start looking under the bonnet of the top edge of treasuries here, then we can actually recognize the things that cast some light onto what's going on here. This squeezing of the gap. So in this situation here, this is very bullish. The guys will know this from the classroom this morning. This is very bullish. It's not as bullish as all the lines going up, but the gap, the ability for the market maker to contain the upside should the market break north is very limited. Very limited. So when the market maker squeezes to start containing the upside, they still have a difficult job of it. They still potentially have a very difficult job of it, but at least they're getting close to being able to contain any upside risk. The frequency is changing. The bar to selling this is still very high, so we require a multitude of information here. And you can see we get four in a line, four straight in a line. That's what we talked to the guys about the high bar frequency. The same as the buy trade at the bottom edge when we had four in a line here for the buy trade where we bottom ticked bonds. Where we had four in a line at the bottom edge here where we bottom ticked bonds this morning. Take a look. See it? Four in a line. Four in a line. High bar entry. Profits. Four in a line. High bar entry. Profits. Four in a line. High bar entry. High bar entry. Profits. You see it? Profits. It goes into a parallel shift. There's no edge for me to do anything. The blue line's leading, but the black line's just trailing it. It's not gaining any advantage. The ability to contain the drop is going to start showing up at some stage, but it's certainly not visible during that entire phase. It's not even close to visible. So as soon as I see the price starting to pin into the first few minutes, it's time to bag some monies at wholesale prices at 16. That's where I closed out my bond position at 16. So you can see that we're not really getting, and the reason we closed it out is this big arrival of volume here. So we got a big arrival of volume here, and the curve, you can see the curve at the belly was becoming very obvious. We very rarely get the belly coming in, but when you get the belly coming in, you pay attention to it. See it? So this at the bottom edge is R squared for the belly. So when R squared for the belly goes bid, we definitely pay attention to it because we very rarely get R squared going bid or offered for the belly, which is why this 4 is not including the belly. The belly is a very, very big signal. So when there's a massive volume coming in, you've got to be kidding me on. I'm just taking my trade at that stage. And you can see obviously that the blue line is below the black line. So that when the belly comes in, they can contain the drop. They've got the ability to contain the drop because the market maker is now in control of the drop. In other words, what we're doing is we're casting light on a trade that previously there was just darkness. Nobody could see under the hood. We couldn't see what was going on in this area, but now you can see that this is a very, very obvious sell trade. Very obvious sell trade. And this is a very obvious exit, possibly even a buy trade reversal. Very obvious. But it's only obvious if you turn your vision into a different frequency. So you've turned your vision into a different frequency, and now the guy's hiding in the bush there, or the guy hiding behind the tree there is now very obvious. You can now take a shot with that certainty that you've got the right thing in your sights. The ability to know that you've got the right narrative in your sights is incredibly important in trading, because everybody in the retail space can only see this. Everybody in the retail space can only see this. Everybody in the retail space can only see this, and they use visible indicators like volume, price action, Fibonacci's, Elliott waves. They use visible elements to find trade opportunities. Well, you haven't improved your sight here, have you? You haven't improved any part of that image by having a visible frequency trade idea. Visible. So if you keep using visible trade ideas, you might be able to improve elements, but you're still missing things happening behind the scenes. You're still missing. So some of them can give us a bit of information, like the book liquidity is obviously visible, but it still doesn't tell you. You know, we had Reeves' comment from yesterday, what happens if it's a spoof? So the book still, the visible book still doesn't tell us. It gives us a good clue, but is it enough to launch money into the markets and take advantage of? Is it good enough? That's the question we're trying to answer, isn't it? So this is the most important aspect to all of this part of trading. Is it good enough is the question we're trying to answer at this stage. So when we're dealing now, we've got the ability to find that person hiding behind the bush. We are casting a different frequency onto that trade. We called a trade in the room earlier on today, did we not, guys? Yes or no? The buy trade in gold. Did I call that earlier on? Where the market maker was containing the dark forces. And we suggested it was a 1, 2, 3 into the bottom edge. Remember this trade? This trade this morning? How did that trade do? Remember, we said you can actually buy at higher prices here and you'll probably do okay. You can actually buy at higher prices up here and do okay. Well, look at what happened to that gold trade. You see what happened? You got the easy punch. Now, the disappointing thing is quite visible. It's still contained by the market maker, right? So when it's still contained by the market maker, you know it's going to be an easy sell trade coming up. So you're starting to watch this giving you the sell trigger there and then again there. You see how easy it is to see those two sell triggers? So this is going to be an easy short sell coming back in again, isn't it? It's going to be an easy short there, and it's going to be an easy short there. Well, that little trade, guys, went from 63.5 to 70. Sorry, 68. I wish 68, right? So $450 profit, right? $450 profit, because now what you're seeing isn't just physical liquidity. what you're seeing isn't just visible. Now what you're seeing is the frequency of that visibility. Now you're able to see in the darkness of the marketplace. Now you're able to see the light. The curtain has finally been drawn back on these ideas. And you're now able to see when the market was very, very difficult to understand why things were taking place. That when we change our frequency to see things in a different way, a way that nobody else has ever seen the markets before, then all of a sudden these little characters in the darkness become visible. All of these little actors who are hiding in the bushes, the citadels of the world, the two sigmas of the world, who trade in the shadows. They trade in the shadows because they're trading in this micro, sometimes nanosecond frequencies that simply can't be picked up by the naked eye or even by the brain potentially. But we can see them taking place. It's been a long journey to get to this point, but I can now see them taking place. We know who's in control. And once we know who's in control, we know how to deal. We know how high a bar to set for a specific trade entry point. And you can see with that bond trade, just even that bond trade on its own, into a data release that we were able to see behind the scenes. We're able to see behind the scenes here. And we saw this big improvement in the market maker positioning here. And we saw that flattening out. These guys are no longer in control. And then we get the trigger to go in. We get the trigger to go in, a high bar entry to go in. And with a high bar entry to go in, we then annihilate the sell side opportunity right there. And we absolutely rip the market to shreds. Why? Because we've got thermal vision. We've got thermal vision. The poor suckers never saw us coming because they didn't have thermal vision. They never saw us coming. All they saw was this picture looking at us, and all we saw was this picture looking at them. Game, set, and match.